Welcome to this week's Weekly Forex Forecast for the week ending January 17th, 2025. Today we are talking about the DXY, the euro, the pound, the dollar versus the Canadian dollar, and also gold. So today we had that US jobs report that came out very hot. So let's talk about that first before we dive into the charts, because that's going to help explain what's happening here today. And this was a much anticipated report simply because we had the DXY testing that 109.5 resistance that we've talked about. However, as I've mentioned in previous videos, guys, I did think that we were likely to see higher from the DXY before the US dollar potentially tops out. And this right here is really the shocking number that came in today with that non-farm payroll employment change coming in at 256 versus the 164 forecast. Now, you can see that this number here from the previous month was actually revised down a little bit. But this didn't really matter just because this number was so significantly higher than this one here, the forecast number at 164. Furthermore, unemployment rate came in at 4.1% versus the 4.2 forecast. So overall, guys, it was a very strong looking jobs number, here in the US. And look, you can sit there and say, these are fake numbers, they're not accurate, etc. That's what everybody always says. But the bottom line is it doesn't really matter when you're a trader, because what matters is the fact that markets reacted to it, right? I don't care about whether they're factual or not. All I care about is what the market is doing. And so far, the US dollar is rallying above 109.5. So this is what I've alluded to all week. We've talked about the 109.5 level. This was our target. Okay, this was our target going all the way back here to this area following the reclaim of this channel. And the reason this was our target is because you can see that this low right back here, we had this big drop back here in late 2022. This was an imbalance through here, also a target, a magnet for this market following the break above areas like this. So 109.5 was the target. However, what I've alluded to all week is that we could see the DXY test the top of this channel closer to 110.50 up toward 111 before we potentially see at least a local top form for the US dollar. So hopefully you guys have stayed on the right side of the market. I know, those in VIP have, just because all week, guys, we've talked about this retest down here on Monday where we saw the DXY test this area around 108. And I know a lot of people were getting bearish here on this candle. And what I was saying repeatedly all week is that this was just a retest of support. There was no change in the trend here for the US dollar. And sure enough, we're seeing the market continue this rally above 109.50. So, guys, so far, the dollar is still bullish, no change there. That's been the case ever since October. However, I do think if you're looking for, potentially a local top here, you're looking at this area between 110.50 and 111. So this level up here off of these two highs. And the reason for that, I've talked about this before, but a lot of times when you get a fake breakdown like this or a failed breakdown of a pattern, you do tend to get a retest of the opposite end of that pattern. So you can see we had the reclaim back here at 102.60. And so the opposite end of this pattern, it comes in up here around 110.50 to 111. Now, don't go thinking, though, that this will be the macro top for the US dollar. It might be. It might be. But we don't know that yet. So I think it's important to not get ahead of ourselves and instead just look at this as a resistance level as we would any other, just like 109.50. Because what it's going to come down to really is the structure of this uptrend. If we see, and I'm getting a little bit ahead of myself here, but if we see the market come up here and test this level, and then start to carve, lower highs and lower lows and take out some of these lows along the way, then that could potentially be a macro top for the US dollar, right? But instead, if we see it come up here and test this level and then just range up here, that's not going to be enough to call this a, macro top for the USD. So we'll see how this goes, guys. But, again, 109.50 is going to be critical into today's close. If the week does close above that, it flips to support with eyes on 110.50. And if, on the other hand, we do see the DXY close today below this area here, it remains intact as resistance for next week. Okay, so the bottom line is if we see the close above, then this right here is going to flip to new support, eyes on 110.50. But again, if we close the day and week back below here, then this area would stay intact as resistance for next week. So really, it's going to come down to what we get here from this market over the next 5 or 6 hours. So next up, let's talk about the EURUSD, guys, which hopefully you are not getting bullish this week, because I talked about this many times here where we have targets on the weekly time frame going back here to areas like 1.02, also this area around 1.09. Now, we saw this tested here last week, okay? However, the key for this week, and I talked about this many times in videos, and hopefully you guys, stayed out of this, But this right here, this daily close back above these lows, in a lot of cases, this right here would start to signal a potential bottom for a market. But the reason this right here did not, and I was saying this, repeatedly, including in the VIP group, but the reason this did not constitute a bullish reversal for the euro, at least not without further information here, is because the weekly closed below. Last week closed below. So last week closed below. This was nothing more than a retest or filling in this body from last week, filling in the imbalance up here at these closing prices. So this is why I was not getting bullish this week on that daily close above 1.035. So the weekly time frame told us, guys, that it was time to stay bearish here. Furthermore, when you look at the daily, and I talked about this in VIP as well, notice this candle all the way back here on Tuesday. This was your clue, because here's your key level right here, right? We saw the daily close below, then we got the daily close back above. A lot of people were getting bullish on this. But if this was going to be a reversal, guys, the EURUSD should not have been closing Tuesday's session back below 103.50. So I talked about this in VIP. I pointed this out and said that this looked pretty bearish. Sure enough, retest the next day and the sell-off back there towards support. Now, one thing I talked about this week was the potential for a retest of this low right here to sweep this low right here and then bounce, right? And we did get a little bounce here today, but the market really didn't go much further than this area through here. And that's kind of to be expected because you can see where this is building up as resistance here for the euro. So we could see the market range here a bit. It depends on where the DXY closes, but this is certainly not something I would be looking to buy. I do think we are likely to see lower here from the euro. And if the euro were to get below this area, all the way down toward about 1.02 today into the weekly close, then that would start to look pretty bearish for next week because this would flip to resistance. And we've got the next support coming in at 1.009. All right, so bottom line, overall, still pretty bearish here. Downtrend is intact. The weekly looks bearish. There's nothing to get bullish on here. We do have the market coming into support, though, so you've got to respect that. Just because if the market closes above this area back here, then we could see a bounce here. We could see a little bit of a range develop for the euro going into next week. So timing is going to be critical. I mean, you don't want to be shorting into support, but at the same time, as I said, there's really nothing to get bearish about here. So in my opinion, not financial advice, but you're either looking to short next week against these lows here, or you're waiting for that sustained break below this area to get short for a move down there toward 1.009. All right, guys, so next up is the pound, and we talked about this one all week long, and what I said here, the last video I made, was if you are buying the pound on the daily close back above this key level, so just like the euro, guys, this week, we had the market give a little bit of a fake out here on the daily, where we got the close back inside of this range, right? So these lows back here, we saw the daily close back above this, even this level here. However, the critical point here, there were two critical points here for the pound, and we talked about this in the last video, is the fact that the market was holding below this trend line right here from 2022. You can see from this low all the way back here, right? We have the market holding below these lows. And we talked about this at length in VIP, and you can see where this was tested right here this week as resistance. So if you were getting long through here on that daily close back above these lows, you were getting long right here into this massive resistance area. So, again, we talked about this a lot there in the trading group. And if you guys do want to join us, see the link in the description of this video for 85% off lifetime access. Or if you're on the website, click on the Join VIP link. So all in all, guys, the pound looks really bearish here, in my opinion. And like I said recently, too, I mean, when you look at the euro versus the pound, I think between the two, given the fact that Euro GBP is actually at a multi-year range low and bouncing from that, this, if you're looking for a short between the euro and the pound, I think the pound is the way to go, just because of that Euro GBP range that we're seeing develop, where right now the euro is outpacing the pound. It's looking stronger than the pound. So the pound here, guys, I mean, with the DXY, if the DXY is going to retest 110.50, 111, we could honestly see the pound come down here and take out these lows and potentially even these lows back here. Now, keep in mind, there's an imbalance all the way back here, right there at about 116.45. Now, that might seem lofty considering where the DXY is, but keep in mind that this market has moved incredibly fast here to the downside. With the DXY not really doing a whole lot this week. It is up, but it's not up to the point where you typically see the pound doing this, okay? So the idea of a sweep of these lows and even coming down here toward this area is not out of the question, just given how weak the pound is relative to the euro. All right, so bottom line, guys, for the pound, if we see it closing below this area that it bounced from today, so right around 1.22, that really, in my opinion, is going to be the key going into next week. If we see it closing above this, then we have a little bit of a range here where we could get a little bounce next week. But if we see it close below this in a convincing manner, then this flips to resistance, and we're looking at that next level down here around 120.80 or so. Okay, so just like with the euro, guys, I favor looking for shorts here, but timing is going to be critical. You don't want to be shorting into support here. Another thing to keep in mind too is if you look at the 4-hour time frame, if the market does hold above this 1.22 level today, I'm not sure that the market can get all the way back up here toward 1.23 next week. Instead, what you could kind of look for is a move back here towards some of these lows. So right through here, across these lows, maybe sweep this high here on the 4-hour time frame next week, and then, start the move lower again toward levels like 120.80, right? So that's just one idea for next week, but that's only if we see the market close above 1.22 today. That, in my opinion, is going to be the pivot for what we see next week. The dollar CAD, guys, is looking really good here. This is an idea that I mentioned in the VIP group as well. We talked about it here on YouTube as well, and also the website, but you can see that we had a range buildup over the past few weeks. So really nice range here from the dollar CAD. We also then saw a sweep below this, a reclaim, and this was the buying opportunity right down here at the lows that I talked about in the VIP group in real time. So I'm still long here, guys. I longed it down here in this area, and I am still long looking for a break above this area here. Now expect sellers to defend 1.445 next week, just because that is those range highs up here that have yet to break. And keep in mind too, guys, this right here, this sweep is something that we talked about in VIP when the market was back here. So when the market was trading back here, the idea I talked about for this week was to get a sweep of these lows, flush that liquidity out from down here, and then look for the reclaim for the move back toward range highs. And that's exactly how this has played out so far. So really nice here from the dollar CAD. The reason I'm still bullish on this market, despite the fact that we are coming into those range highs, is the fact that if you go out here to the weekly, and we've talked about this many, many times, but you can see that going all the way back here to this high, going back to 2015 low, back here 2015, 2016, you've got these highs up here and these lows. So this has just been one big range for the dollar CAD going back basically a decade. So the idea of a move back here toward these highs, right, makes a lot of sense, right around 1.467. So that's why I continue to eye this area here for the dollar CAD, and that is going to be my target for my long, okay? So the key here for the dollar CAD, though, like I said, you don't want to be longing into resistance, just like you don't want to be shorting into support with the euro and the pound. So for the dollar CAD, what this is going to come down to is you've got to see the market getting above these highs right around 1.445. And the dollar CAD was a little bit of a mixed bag today, just because if you look at these reports here between the US employment and Canada employment, you can see where their numbers came in, really hot as well. So that's why we're seeing the Canadian dollar surge today. So that's why the dollar CAD here isn't really doing a whole lot. Not like you'd expect considering what the US dollar is doing. But I still, again, I still like it, higher up there toward that decade-long range high around 1.467. So the idea for next week is very simple, waiting for, a break above these on the high time frames, right, to flip this to new support to get that push up here toward 1.467. Now, keep in mind, while we're below 1.445, we could still see a pullback here into some of these lows next week before we get the bounce. So just keep that in mind. But again, I am long this pair, as I mentioned in VIP in real time, because I do announce my trades there, including entry, stop loss, and take profit. So this one's going really nicely, but we'll see how it plays out next week. It is approaching that resistance area though, so expect sellers to defend that early next week around 1.445. So last up, guys, let's talk about gold, XAUUSD. And I mentioned this one yesterday in a video where, if you guys saw that, I mentioned I was short from this 2677 area, so right up here. And look, I'm still short here. My stop loss is just above today's high up here in this area. If the market closes like this, though, if it closes this convincingly above here, I will get out. Now, I want to be clear, guys. This was a smaller position. I also had 3 positions on to start the year. I had this gold short. I had my dollar CAD long that I talked about. And I also had an S&P 500 via the US 500 short from this week's high that I also called out in real time in VIP, which that market is down about 3%, over 3% from my entry. So, on the week, guys, I'm actually in profit. I'm not saying that to brag. I just want you guys to know who are on the outside looking in that this isn't a case where this was my only trade. So I put on this trade after those 2 other positions were well in profit. So for now, guys, if gold breaks above this area through here, So these lows back here and these highs, you can see where today's low right there at 26.64. This is what we talked about yesterday, right? So what I talked about in that video was the quote unquote safer entry for a short would have been a sustained break back below this level, right? So you can see where we got the break above these highs. And of course we didn't get that. And so far, I mean, gold is just taking off to the upside. So this looks really bullish, guys. Chances are I will be out of my short here pretty soon, but no big deal. Again, this was one of 3 positions and the other 2 are in profit. So, so far a very profitable start to the year. So if gold does break out of here and also holds above it next week, keep that in mind as well. If we do get the breakout above here, then we're looking at a move back here toward these highs right around 27.16. And then above that, of course, we have the all-time high. I did think, or at least I wanted to see a pullback down here into the lows. I mean, ideally, the reason for my short, I talked about this yesterday, guys, but the reason for that is you have this equidistant channel that goes back to 2023. And so the idea here was that we haven't seen a retest down here of this trend line since back here in early 2024. So it's been over a year. And I was kind of looking for a move down here into this area to sweep some of these lows before, getting long into 2025. But of course, it doesn't look like we're going to get that, at least not yet. And in case you're looking at this saying, why is gold rallying at the same time the US dollar's rallying? And the reason for that, guys, is if you look at the jobs report today coming in as hot as it did, right? This NFP number over here, specifically this one, I mean, also unemployment, but especially 256K, that number right there indicates a strong economy, right? And again, you can argue with whether or not this is, factual or not, but the point is this is what the market is reacting to. So when you have numbers that come in like that, it indicates a strong economy, and a strong economy means that that sticky inflation that everybody's talking about isn't going away anytime soon. And of course, gold is an inflation hedge. So when you get numbers like that, guys, investors do tend to flock to gold for protection. So that's why we're seeing gold up with the US dollar today. Fundamentally speaking, it is, bullish for gold, right? So as of right now, looking really strong. Like I said, if we get the breakout here this week and the market can hold above here next week, then we're looking at 27.16 and 27.90. Break above that, guys. And I mean, it's basically, blue sky breakout toward 3K. Now, if we were to see the market, next week sometime fail at this level and close back below here, then of course we could get that pullback down here towards some of those lows. But again, the fundamental landscape right now, at least for gold, looks pretty bullish with inflation not going anywhere anytime soon. So we'll see how this ends the day and week and also what we get here next week. But it does look pretty bullish with the break above this 26.75 area. But just keep in mind, guys, there's also still 5 hours left in the session. So even though we aren't likely to see a ton of movement in the last few hours on a Friday, you never know with these markets, especially on NFP Friday. So with that, I hope this video has helped. We should have a lot of great opportunities coming up next week with markets following through on what I've discussed so far in 2025. Subscribe to the channel and click the bell for notifications. Don't forget to join VIP and claim your 85% off lifetime access. See the link in the description of this video, or if you're on the website, click on that join VIP link. I will see you on the inside. Have a great weekend, and I will talk to you again next week.